Hello, everyone, and welcome to another Southern California housing market update. My name is Stephen Meade with Domicile Real Estate. I apologize for some background noise that you might be hearing. I'm actually recording this one from a hotel lobby here in Burbank, California, so still within our zone. Kind of some interesting things to talk about. Obviously, of course, don't forget to like, subscribe, and hit that notification bell if you're watching and you like these videos to find out how you can learn more about the market. And of course, I am with Domicile Real Estate for people who love houses. Let's go ahead and get started and talk about the holidays and what we can learn as buyers and sellers from the data in our market from this time of year. Let me get our screen share set up here. All right, here we go. So let's talk about our first thing, right? We're seeing what we normally see this time of year, which is the number of listings tends to go down. This isn't representative necessarily of an overall market trend. It's just a very seasonal item. We've really been looking at tight inventory pretty much for the last couple of years. But I think, again, this has been a perennial refrain in these videos is look at where we are. I mean, last year was a tight inventory video, but look at where we are versus last year, right? It was already tight inventory at probably about 7,000 units under $1 million, and here we are at 4,500. The story's a little different in that $1 to $2 million category, but it's still lower, right? It's maybe not off by the same percentage, but it is still absolutely off. The one thing that I think is a little hopeful is what we're not seeing is just this nosedive in trajectory. We are seeing decreases in inventory, but it's not quite the nosedive that we saw last year. So I have a little bit of hope that this is going to be a little bit of gentler, and we might actually end up around a similar low point of 4,000 units under $1 million. Just as a reminder, this is in Los Angeles and Orange counties. So if we look at our last 14 days of new listings, I think this really kind of gives you the holiday motif here. And that is we've just taken an absolute nosedive and new things hitting the market. I mean, really, sellers have decided their minds are somewhere else right now. That's not terribly uncommon, but it seems especially acute this year. And especially when you look and you kind of look at where we were for the rest of the year. I mean, if you notice this, we are right at about the same levels of new listings as we were last year under $1 million, maybe a little bit more for that 1 to 2 million category. The question is, when we do this update again in 2 weeks, we're going to see that this trajectory continued, or did it flatten out? So this is a real interesting graph to me because I think we're going to see it change quite a bit, and I'll explain why. We are not at a low. In fact, we're not even seeing the same number of homes going to escrow as last year and under $1 million. We are actually fewer homes going into escrow than last year. I think a lot of that's been a function of the interest rates, but we've really seen some drops in interest rates. And I think in the next couple of weeks, we're going to actually see this number bounce back a little bit. I have said it 1,000 times before, my absolute favorite time of year for buyers is that period between Thanksgiving and probably the second week in January. It is the best time all year long for buyers. Number one, all the sellers are actually motivated to sell, and two, you face less competition. We look at our absorption rate. I think this one is kind of interesting to me to just see how different the market reaction is in our under 1 million versus our over our 1 to 2 million category. And I think a lot of that is the interest rates, right? Seeing this absorption rate jumps up means what is that saying? It's saying that buyers who've been sitting on those sidelines are going to actually jump back into the market. I know we've received inquiries that way. We've been telling people now is the time to jump back in. And I think that's why you're seeing that in that very interest rate sensitive under $1 million market. If we look at kind of our closed prices, this one's kind of interesting to me. The upper end, prices accelerated. The median end of the market, which is between 750 and $1 million, pretty much is flat, maybe slightly down. And then that entry-level market, I think you're going to see that entry-level market is going to end up popping here in the next 2 weeks. I think when we run these numbers again, you're going to see that entry-level market just really jump up, especially when you start looking at and incorporating in single-family homes. Obviously, at this point, most of the homes in this 25th percentile are going to be condos. They are not going to be single-family homes in LA and Orange County. Now, if we look at our still active after 14 days, this one's kind of puzzling to me. And I think part of this is an artifact of us being in a holiday season. And that's seeing this number kind of shoot up Really close to where we were at last year for the same number. And then it's funny, as soon as you saw last year, as soon as we hit January, it really started taking a nosedive through the spring when that market gets more competitive. I think that's what's going to happen this year, but we'll have to wait and see. Now, our list to close ratio is honestly holding pretty steady. We are right around 100%. And one thing I like to talk about with this statistic is that this is really that measurement of are buyers and sellers' expectations in alignment. This is about what do sellers think their home is worth and what are buyers willing to pay and how close those things are together. When you see this kind of head towards 100%, that usually indicates a price stable market, right? And a price stable market meaning sellers are putting their homes up for about what they think they're worth, and buyers think that those are pretty accurate numbers. I am guessing that this might go back up above 100, 101% as we go into the spring. So just a fair warning on that. We'll have to wait and see, but that is my prediction. Now, if we look at our days on market for new contracts, I think this one's kind of interesting. We've seen some steady growth here in that under 1 million, but look at what's happened with this $1 to $2 million. I think part of that is an artifact of just not a lot of sales happening in that price category. So that can skew those numbers a little bit. As you can see, this is not unusual to see these numbers kind of go up towards the end of the year like this, but we are still well lower than we were at last year. So kind of bear that in mind. Finally, we're going to talk about sort of our three-way chart, and this is a bit of some surprising news. I think a big part of this might be an unusual holiday proclivity of the rental market, and that is during this holiday period, we just saw the market rents, the rent index drop quite a bit. I think this is because people really do not like to move between Thanksgiving and New Year's. Not when they're renters. When they're buyers, they're willing to do it. When they're renters, not so much. Though we do see that the interest rates coming down have again really eased some of that payment index for a median priced home and kind of brought it back out of the stratosphere here down to this number. Obviously, I know most people would love to see where we were at in, say, April of last year. We'll just have to wait and see if that happens. Finally, we've got our prevailing mortgage rates. No surprise here. They kind of peaked maybe about a month or so ago, month and a half ago, and they've been kind of dropping ever since, really heading towards that 7%. We are seeing jumbo adjustables well into the mid sixes. So, I mean, I think if you are a value shopper, that might be an option for you that you should look back into, because you can, especially over $1 million, you're going to see some pretty significant savings. Anyhow, that's all I've got for you this week. Obviously, stay happy, stay healthy. Once again, if you are a person looking to buy, I mean, really, this is your time. Hopefully you reach out to us. We'd love to work with you. And if you're a seller, really, it's time to start thinking and preparing for next year. Anyhow, don't forget to like, subscribe, and hit that notification bell. Questions and comments, as always, we love them. We'd love to work with you. And have a great day, everybody. We'll see you again real soon.